Most people, when they're trading a small account like $10, $20, they don't put in a trading plan. And I think it's one of the biggest problems that you can make, because if you don't have a trading plan, chances are you are going to be risking more than you want. You are not going to be following your strategy, or else you are going to be taking your trades too early. You are going to have much emotions in your trading. So in this video, let me show you how to create a trading plan for a small account. It's a very simple trading plan, very simple. But if you stick with me, I will also give you the exact trading plan that I'm gonna be using to trade my small $20 account that I'm about to deposit right now. So if you want to learn more about that account, about how I'm trading, make sure you subscribe to the channel so that you won't miss any of the following videos. Now, before you start trading an account, a small account, you need to understand this. Number one, small accounts are likely to blow no matter how good you are, or no matter how profitable your strategy is. And why is this? It's simply because if you have a $10 account, chances are you are going to be having like 3 or 4 chances to trade that account, and losing 3 trades in a row is very common. No matter how profitable a strategy can be, losing 3 trades in a row is a very common thing that is gonna happen. So chances are you are going to lose that money, even if you can even if you are very good, even if you have a good strategy. So do not be mad when you lose a $10 account, because you just know that it's normal, because it's a very small account, right? And number two, you cannot use proper risk management in a small account, right? And the reason why I'm saying you cannot use proper risk management is, when I tell you about proper risk management, I'm talking about risking like 2% of your account, 3% of your account per trade. But if you have $10 in your account, think about, can you risk 2% of $10? No, you can't. So you can be risking $3 per trade, and in a $10 account, that means you only have 3 chances for you to make something happen, right? So you need to understand that there is no proper risk management that you can place in a small account. So once you understand that small accounts are likely to blow no matter how good you are, I sometimes blow small accounts. I don't really like trading small accounts. Why? Because I know that a $10 account, my chances of blowing a $10 account are very high, rather than when I'm trading a $100 account. Because on a $100 account, I can do risk management. I can get like 30 trades, 40 trades. So chances of blowing in 40 trades are very small. But on a $10 account, I only need 2 or 3 bad trades to blow. So no matter how good you are, I do blow $10 accounts sometimes, but I don't really trade them a lot of times. Sometimes I can grow them, sometimes I can blow them. It's 50-50. I'm not here to say that I'm a very good trader. I'm never going to lose money. No. If I trade small accounts, the chances are very slim, because I only have few chances of making that, right? So if you understand this, that there's no proper risk management, there's chances of blowing, then your emotions should never get into part of this, because now you understand that this is a small account, right? So here is how small accounts are grown. This is a step-by-step process. This is the things that you need, right? First of all, risk management is key. You need to understand that risk management is the best thing. The risk that's the key for growing a small account, right? No matter how good your strategy can be. I'm talking about risk to reward ratio. So risk to reward ratio is when you are risking a certain amount per trade and you are targeting a certain amount per trade, you need to make sure that you are risking small to make more, because it's all about chances. Because we said on a $10 account, we only have 3 trades maybe, or 4 trades at most, right? What are you going to be doing in those 4 trades? Chances are you are going to lose maybe 2 of them or 3 of them out of 4, right? Because your stop loss is going to be too close to the end, things like that. So there's a lot of things that affect small accounts, right? So you want to make sure that if you get one trade in the right place, or if you get one winning trade, you are going to be making much money than you have been risking, because the risks that you are putting in place, you need to cover them with the reward that you get, because the reward are not going to come over and over. The rewards are going to be few, but they need to be big, right? So after you understand this, you need to also know that you need to trade one pattern or strategy, right? One pattern or strategy, what I mean is, if you are trading trendline breaks, go for trendline breaks. If you are trading the MACD crossover, go for MACD crossover only. If you are trading like the chart patterns, double bottom, double tops, go only for that. Because the thing is, you want to understand, when you lose that account, you need to understand why, what was I doing wrong, right? Or even if you, when you make money, you need to understand, okay, this was going fine, this type of trades was going very well, because you are using one strategy or pattern. So stick to that. Then number 3, patience is even more important. You need to understand that for you to grow a small account, you need to stick to one pattern, as I said, and also to one instrument, right? So you need to have patience and wait for your setups, right? One of the problems that you make in the market is trying to get into a trade at every time, right? You open your MetaTrader, you don't want to get out of MetaTrader without placing a trade, right? So I see sometimes when we are in the Telegram channel, if you are not part of our Telegram group, I will leave the link in the description. So I can spend like the whole day without posting any setups or any signals, right? Because sometimes I share setups in there. So when I do that, people will come to me in my inbox and say, why are you not giving us setups today? Or they will say, I remember someone came, I'm not pointing fingers to anyone, someone came and say, I need a setup to make money right now. I need money right now. I said, what? How can I just go into the market and see a setup? So what do you think? Do you think like I'm the one who controls the market? No, the market will just go. For me, I only trade the setups that I know that I have back tested, like trendline breaks, support and resistance. So if there is no chart, if there is no instrument that is at a key level, at a trend line break, that means I'm not going to be giving signals, right? So but when I see them, I just give show you the screenshot. Here is why I placed the trade and things like that. But you need to be patient enough to wait for your trade, right? So here's how you create a trading plan for your small account. Number 1, you need to write this on top, and you need to read this every day, right? You need to write this. This is a small account, which means I will never get emotional when I win or lose a trade, and I will be patient to wait for my entries and follow my trading plan. You need to write this on top of the page that you are going to be writing your trading plan, and then you need to stick this to the wall next to your trading desk. If you don't have a trading desk, just make sure you put this somewhere where you see it, this trading plan, right? Then number 2, you need to write your strategy. You need to choose one strategy and one instrument to focus on, and then you choose your time frame and stick to it, right? So you need to know what is your strategy that you are trading. If you are trading trendline breaks, that's it. If you are trading chart patterns, that's it. If you are trading support and resistance break, that's it. If you are trading the bounds of the market on the support, if you are trading moving average crossovers, you need to have one strategy and then one instrument to focus on. For me, I like to trade volatility 10 on a small account because the risk is small, and then when it grows to like $50, then I move on to volatility 75 because it's faster that way, but the risk is more, right? Then number 3, you need to know what's your risk per trade and how many chances you have, right? So divide your total capital with your risk per trade and see your how your chances are, right? And then you aim to make 3 to 10 times the risk depending on your account, right? I will show you this on my own trading plan. But what I mean is, if you have $10 and if you think about risking $2 per trade, that means you have five chances, right? If you have $10 and you decide to risk $3 per trade, you have 3 chances. And when you have 3 chances, you need, the more the chances you have, the lower you can lower your target, but the lesser the chances you have, the bigger your target should be. So for example, if you are risking $3, you need to be making 3 times that $3, so at least $9. But you can go to up to 10. Like, let's say you risk $3, you can say, okay, I'm risking $3 to make $15, right? That's 5 times your risk, right? I'm risking $3 to make $20. I'm not going to get out of this market until the market moves up to my $20 target. The reason why I'm saying this is because your chances are few, so you want to utilize the first chance that goes in your way, right? So how do you stay disciplined? You need also to know how do you stay disciplined, right? Because in the market, your biggest enemy is your biggest enemy in the market is your emotions, right? There's no one who is fighting against you in the forex market. Your emotions are your biggest enemy. If you can control your emotions, then you can be profitable, right? So here's my trading plan for my small account that I'm gonna be risking, right? That I'm gonna be putting into the market, right? So first of all, I'll write this. This is a small account, which means I will never get emotions when I lose or win a trade, and I will be patient to wait for my entries and follow my trading plan. This is something like a devotion, like what do you call affirmations, right? This is something like an affirmation that I look at and I read it every day, right? Then I trade trendline breaks on volatility 10 index until the account gets to $50. Then I will move to volatility 75, right? So this is a $20 account that I'm planning to deposit today, and then see if I can have fun trading it. But I will be trading volatility 10 index. So I will try to raise that account from $20 to $50 with the volatility 10 index. If I lose it, I lose it. If I make it when I get to $50, then I will move to volatility 75. Volatility 75 is very volatile. It moves very fast, but it's risky, right? So it needs a big account, because when I get to $50, I can say, okay, now I'm risking $3 per trade to make $10, right? And I will have like 15 chances from that $50 account. So I have 15 entries that can take me 3-4 days, right? With even if I'm losing each and every entry, that will take me like 3 days, and I don't think I can lose each and every entry for 3 days straight, right? For 15 trades in a row, I don't think so. Now I risk $3.20 per trade, and I have 6 setups to make something happen, and I will aim $10 or more per trade as my target, right? So this is a $20 account, right? So as I said, this is going to be a $20 account. So this is a $20 account. So I will be risking $3.20 per trade, and I'll have 6 setups, right? Because if I say 6 times $3.20, something like $19 or $20, I don't know, $6, I will have 6 setups to make something happen. So this $20 account, I only have 6 chances to make something happen. If I lose 6 trades in a row, I'm out, right? But if I get 1 or 2 trades of those six trades, then I'm safe, because if I get 3 winning trades out of those 6, then aiming $10 per trade, that's $30. I'm already above my entry point, right? So that's my mindset behind trading a small account. I know that this is a small account, I can blow it, but if I get like 2 or 3 trades right, then my target is going to cover up all my losses. So I'm going to be risking $3.20 to make $10 per trade, right? So to stay disciplined, I walk away from MetaTrader for at least 30 minutes after placing a trade, with a stop loss but no target, right? So that's what I do when I'm trading, right? And I found this to have helped me a lot, right? So the moment I place a trade, I put my stop loss, and then I don't put a take profit, and then I'll close MetaTrader. I can even leave my phone and go somewhere for like 30 minutes, right? The reason why is because I don't want to be looking at the market soon after the entry, right? I don't want to be looking at my market soon after the entry, because this is gonna trigger the emotions, right? When the market goes in your direction for like $4, you are thinking about exiting at that point, or like $1.20, $3, you are thinking of exiting with that small profit. But if you walk away, you can come back later and say and see the market like if you have lost, you just come and see that you have lost. If the market is in profit, you can find the market being $8, $9 in profits. That is gonna help you, and then you're just gonna say, okay, let me just hold up to $10, $11, $12, or you can just start moving your stop loss coming closer to where the market is, and then you use a trailing stop. So this is my trading plan for a $20 account. So if you like this video, make sure you click that thumbs up. If you have a trading plan right now in your trading, let me know in the comment section below. If you don't, create your trading plan with which is exactly like this one, and then try it and then see what is gonna happen to you. First of all, make sure you find a strategy and stick to that strategy. So thank you for watching this video. I will see you in the next one.